Good morning, the Morning Minute. I am your host, Jim Chamberlain of the Chamberlain Experior Group. Today, let's talk about the question that was posed online about the death benefit of a life policy and if it's really an asset or not. So here's the question that was asked. The dictionary defines an asset as property owned by a person or a company, regarded as having value and available to meet debts, commitments, or obligations by the owner of that asset. Cash values, equity of a life insurance policy are classified as an asset. However, the death benefits are said not to be classified as such. That does not make sense to me, the writer said, considering the definition of an asset. So he goes on to say, allow me to explain. Equity in a home and the cash value in a policy are loans taken directly from a bank or an insurance company. The exception with a life insurance policy comes when the policyholder takes a withdrawal from their own premium deposits. In both instances, the loan, the debt, are incurred by the homeowner or the policy owner, respectively. Goes on to say, on the other hand, I'd like to view the death benefit of an insurance policy as an asset because it is wealth and not debt that is being transferred tax-free to a beneficiary to create a legacy. And when structured properly, the death benefit increases in value each year on an inflationary adjusted cost basis. So here's my response to the writer, and it's a great question. The death benefit of life insurance policy is generally considered an asset during the policyholder lifetime because it's not something the policyholder can use or control while they are alive. And here's a number of points I point out. The death benefit is contingent upon the death of the insured. It doesn't exist as a tangible asset until the insured passes away. The second point I make is the policyholder cannot access or use the death benefit while they are alive. It is a promise of payment to the beneficiaries, not a resource available to the policyholder while they are alive. The third point I make is often that life insurance proceeds are paid directly to the named beneficiary, and they do not go through the estate, which means they are not considered part of the deceased assets for a probate purpose. The primary purpose of life insurance is to provide financial protection for beneficiaries and the loved ones of the insured. It's not to serve as an asset to the policyholder. However, all that being said, if a policy has a cash value component, that cash value can be used or considered as an asset while the policyholder is alive, and it can be accessed or borrowed against. This strategy has been used many, many times over the years. I hope you agree. If you don't, please leave a comment. This has been brought to you by the Chamberlain Group, the Morning Minute. Have yourself a wonderful day. Take care. Bye-bye.